You just have to accept the fact that the good times will eventually end. As irrational optimism wanes, market valuations level off and bull markets reverse. But when exactly is it possible to accommodate that in our plans? Focusing on anything other than price is becoming increasingly difficult due to the rapidity with which the gold and silver markets are changing. Now that this is being recorded, the price of gold is over $4,180, the price of silver is over $52, and Bank of America has just raised their price target for gold to $5,000 in 2026. Even though they didn't mention silver, if you wave a stick around long enough, you'll find an amateur commentator predicting that silver will soon reach $80. Since metals aren't behaving normally, we aren't considering them in our usual ways, and perhaps we shouldn't. However, a crucial fact is somewhat obscured by all this moonshot euphoria. Market bulls eventually fade. A quick shout out to Summit Metals, our channel sponsor. Before we go any further with that, they are your one-stop shop for all things related to precious metals. As an added bonus, they also take care of your selling needs. They will attend to your needs during the entire sales process. Online storefront for Summit Metals. Therefore, we are interested in learning the potential duration of this. This is a crucial factor to think about. But I want us to be crystal clear. I have no intention of leaving a market simply because it is likely to correct or even crash at some point. Many more intelligent people than me have already shown that riding markets is more effective than trying to time them. The phrase is not new to you. Instead of trying to time the market, just spend time in it. This is their point, because the worst mistakes aren't made when markets fall. Rather, they occur when we fool ourselves into thinking we can beat the market. Prior to delving into that cunning plan, it is important to establish that gold is not a game of chance in terms of risk. Usually it doesn't offer very high risk investments. Silver isn't either, in my opinion. At least not at this time. Silver, as I've mentioned previously, is more of a commodity for which I make trades. It's not as stable. As it speeds up, it loses more ground. But before someone says, "That's just your opinion, man," let's examine historical performance and the average duration of bull markets according to data. For every asset, we will do that. This is not, however, an effort to skip ahead of the musical intermission. We are not playing musical chairs. We won't be settling down early to secure a seat. All we're trying to do is get a feel for the potential changes to the music and how to handle them. All right, I will begin by discussing the stock market. If we want to know how people perceive a bull market, this is likely the greatest indicator we have. Based on data from the S&P 500 that spans nearly 100 years, the typical duration of a bull market is approximately 5 years. Like the previous rally from 2009 to 2020, we can observe that some are shorter and some are longer. It was 11 years long. However, 5 is about the middle ground. Bull markets in gold now tend to linger for slightly longer. The price of gold rose from $35 to $850 between 1970 and 1980. That was a bull market of 10 years with a gain of 2,300%. Between 2001 and 2011, there was the subsequent bull market. The price range for gold was $250 to $1,920, gain of 600% in another bull market lasting 10 years. In addition, the present bull market began in 2018 at about $1,180. By now, it's more than $4,180. So far, it's been 7 years. Thus, whereas stock market bull runs typically last around 5 years, gold bull runs typically last closer to 10. Let us examine silver now. Yes, I do squint slightly. Wow, this is absolutely fantastic. I will, however, insert a few smaller coins here. The bull markets for silver aren't as durable. During the years 1978 to 1980, silver prices ranged up to $50. A 2-year bull market would see a gain of 900%. However, silver's price ranged from $9 to $49 between 2008 and 2011. The 3-year bull market saw a gain of 440%. Starting in 2023 and continuing through 2025, the current run ranges from $22 to more than $52. It's up about 136% thus far. Thus, while bull markets in gold typically endure for about 10 years, those in silver typically last for about 3. Allow me to quickly review. For stocks, the average bull market duration is 5 years. For gold, it's 10, and for silver, it's 3. The pattern is that. That is merely a starting point. It is not a forecast. Consequently, 2 intriguing things would be hinted at by this. One is that silver is about to enter its last year of a bull market, which means prices will skyrocket. Additionally, with 3 years remaining, the gold market is only scratching the surface. I mentioned that it's intriguing, but it's also flawed because the silver market flipping 2 years before the gold market doesn't make sense. If those liquidity events were to align, we would anticipate money fleeing gold and into silver, which would prolong the price run-up and eventually lead to a blow-off peak. The fact that it isn't relevant to our present situation shouldn't invalidate the underlying principle that gold rallies are typically longer and silver rallies are typically shorter, and that everything is subject to change. The sample sizes are extremely small. We can only look at the last 2 bull markets in gold and silver in addition to the current one to determine these durations. 5 years for stocks, 10 for gold, and 3 for silver. I think the most important thing to remember is that we can't just expect the current trend to keep going indefinitely. Also, I'd like to believe that it's obvious, but I'm not sure. It is not surprising that Bank of America demanded $5,000 in gold immediately following our meteoric rise to $4,000. The fact that gold will remain in demand is, like, obvious. Bank of America isn't the only one. According to Ed Erdani, who was recently quoted in a Fortune article, gold could reach $10,000 before the decade ends if current trends continue. In 2026, he also predicted $5,000. Therefore, the caution here isn't that silver has just 1 more year. Gold has 3. It's just that every uprising has to finish. You should maintain some of the self-control you exhibit when prices are stable, even when they aren't. We can't use 2 previous cycles as a shot clock, so it would be wonderful to know the exact duration of the current bull markets when they will reach their peak and how to position ourselves around it. Even though the 10-year gold average and the 3-year silver average are frequently cited, we still don't want to dismiss them as random noise. It's common knowledge that gold tends to move in 8-10-year cycles, while silver moves in 2 to 4. Knowing that we are 7 years into the gold cycle and 2 years into the silver cycle, we can use those ranges to determine an endpoint. And the year 2027 fits nicely into that standard cycle timing. Oops, I almost forgot. The majority of analyst projections for cycle length and bull phases continue all the way into 2027, with a few extending into 2026. Nevertheless, analysts seldom foretell anything more than that. It is unusual for an article in Fortune to make the case for $10,000 worth of gold by the end of a decade, and if it keeps going in this direction, it won't have much support. This cycle continues, and I haven't seen anything to indicate that it will end just yet. Although I don't think we'll finish in 2027, it's interesting that most analyst predictions don't extend past that year. The next most crucial step is to determine if a resolution is imminent. Unfortunately, that is our only option. Also, it isn't at the moment. These aren't the kinds of conditions that usually mean a run is over. No untamed excess, no flying acrobatics. Currently, things are behaving similarly to the mid-cycle expansion when momentum is at its strongest. It makes sense. There is a good level of confidence, but not an excessive amount. Not a fad, but fundamentals are driving prices now. Assuming that is correct, the current market situation is indicative of the beginning of the second half of the cycle. There is a great deal of opportunity and the majority of volatility there. So it appears that the most exciting part is yet to come, and that's where we can end it. Please share your thoughts with us. Is the current rate of price change even possible for you to follow? 30 days ago, we were trading below $3,700. Now we're approaching $4,200. Therefore, I am uncertain. Perhaps this is a frenzy. Please share your thoughts with us. If you found anything interesting, please let us know in the comments and hit the like button. For more updates on this topic, make sure you're subscribed and have notifications enabled. If you're still with us, I want to thank you once more for tuning in. Your time is ever appreciated. Be cautious.